This week on the Andrew Yang podcast.
We're breaking things that we'll never be able to get back. Things that were built on an inheritance of policy and economic relationships from the end of World War II onward that now we will not be able to restore because the conditions that allowed us to build those in the first place will never return. So there are certain, good things about the American economy that we knew 6 weeks ago that you won't see again in your life. You and I will die before we ever see those again. It is an object lesson in the principle of fuck around and find out.
It is my pleasure to welcome to the podcast economics blogger to the stars, the purveyor of the No Opinion blog and Substack, Noah Smith. Welcome, Noah.
Hi, it's great to be here.
Yeah, so you have a PhD in economics, I want to say, from the University of Michigan. You turned down the New York Times to be an op-ed writer, which entertains me greatly because, for most people, they'd be like, ooh, like this platform. But you've built your own very successful platform. One thing I love to share with folks is people's origin stories in brief. So how the heck did you become such a big deal economics blogger?
Well, it happened slowly over time. And I think, so I started off blogging in 2011 because, I was transitioning out of studying macroeconomics and I was just kind of pissed off at how badly things were working in the macroeconomics field. And so I just started writing, blogs about that and why I was irritated at that. And then Paul Krugman picked it up because at that time we were in the middle of the Great Recession and Paul Krugman was very much on his anti-macroeconomics kick. And so he picked up this grad student who was expressing dissatisfaction and sort of boosted me to popularity. And that's how I got my first, accidental big break as a blogger. And then after that, I think I just built a following slowly through Twitter, through people just discovering me and recommending me. And then I wrote for Bloomberg for a while. And then that got me some other, some more audience. And basically I just kept appearing in various places and grabbing people from various other audiences to come read my stuff. And then I started my Substack. When I started my Substack, I think Matt Iglesias got 7,000 paid subscribers his first week to Substack. I got 70.
Wow, that's madness, man.
Yeah, almost nothing. And so, it just grew slowly over time. So it's been a linear growth rate.
Well, congratulations, because now you get to call it like you see it. No one breathing down your neck, no one censoring or whatever the heck. So where does someone like you get your data? Do you have cool sources? Do you pay for some Fed research or where do you go?
No, I mean, there's so much free stuff to write about that it's not worth ever paying for research. Economists put all their papers out there as working papers, and the working paper version is honestly usually more sort of complete and honest and unadulterated than the final polished version, which often has things in there that reviewers make people put in there, to sort of jump through hoops to get publication. So actually the working paper will be better. And so you go to the working paper for econ papers. In terms of actual data, I don't really do number crunching. I won't, pull out regressions and run them myself. I think I have done that once or twice, but I pretty much almost never do that. And then, some bloggers do that. And honestly, I think that their results are very mixed. I think that, when you do that, there's always a lot of, caveats and sort of robustness checks and kind of procedures to follow up. You may as well write a research paper at that point, and someone's already written the research paper, so why don't I just go to the research? That's my attitude. And so, and so I think that there's data aplenty.
Yeah, so I get data from publicly available sources, people like you, honestly. I mean, I follow your stuff. And then I get anecdotal stuff from my peer group. So I might as well break into it now because this is what's on everyone's mind. So I've gotten some really negative data points from my peer group lately. Several people have lost their jobs, from within the bowels of a bank, a tech company. I was meeting with a startup and they had investors pull out of their funding round essentially in real time because of the uncertainty. So I've kind of gotten some forbidding signals from within my personal network. And then The data that I've seen also is not very good. Oh, by the way, also in my personal network, I've talked to public company CEOs or people who work with them on the daily, and a lot of them are nervous, and so they're saying, "Look, I'm going to maybe pull my guidance for next quarter because I don't know what the hell's going on. I'm not reshoring investment for my supply chain. I'm just disinvesting. Like I'm just going to start hunkering down." So I've been pessimistic since the advent of Trump's crazy tariffs, and I've been very public saying that I thought these tariffs were a disaster from the get, and I feel like I've seen some similar stuff from you.
So yes, I mean, stuff's bad, very bad. There's no way to sugarcoat this, and also it's not the kind of thing that can quickly snap back either.
Yeah.
Just like Trump came in and immediately broke the transatlantic alliance in ways that would take many decades to repair, he's broken the United States' position in the global economy in ways that will take also decades to repair, if we can ever do it. Probably we can never get. We're breaking things that we'll never be able to get back. Things that were built on an inheritance of policy and economic relationships from the end of World War II onward that now we will not be able to restore because the conditions that allowed us to build those in the first place will never return. So there are certain, good things about the American economy that we knew 6 weeks ago that you won't see again in your life. You and I will
Wow.
die before we ever see those again, and that's what has happened now. It is an object lesson in the principle of fuck around and find out.
Now, so you, in one of your blog posts, you say, "Hey, most Americans don't understand the global finance system or the bond market," and you likened it to a giant dragon that we're all sort of riding around on the back of. And then if the dragon ever wakes up, then it's like, "Oh crap! Turns out we were we were on top of this thing the whole time." I liked your metaphor as a geek myself, not to necessarily lump you in with my Dungeons and Dragons playing childhood. But
I also
what?
played Dungeons and Dragons, and of course that influenced my metaphor.
Yeah. So what did you mean by this sleeping dragon?
The U.S. bond market is much larger than the stock market, and the point is that people think it's supposed to be not very risky. You invest in stocks. Stocks are a risky asset, supposed to go up, go down, blah blah blah. Bonds are supposed to be rock solid, and U.S. Treasury bonds have been treated as a risk-free asset for decades. Banks, what banks make money by borrowing and lending, right? And then some of those loans are risky loans and some of the loans are safe loans. And the safe loans act as ballast that prevents the bank from going under if some of the risky loans go bad or if people pull their money out, et cetera. Treasuries are the safest of safe loans, or were thought to be. And so banks would park their money in treasuries to make themselves safer. And when you have, for example, capital adequacy rules, what does that mean? That means that you have to basically have a bunch of safe assets around to sort of back up your risky lending. You have to be able to cover those loans. And of course, you do that with treasuries. Now, if treasuries have become a risky asset, that doesn't work anymore and our banks are insolvent, right? Because they skate on banks will now skate on the edge of insolvency that were previously rock solid. Okay. And when the bank system gets screwed, you remember the Great Recession, right? We lived through that. We can see what happens when banks stop lending. So then bond markets are based on treasuries as well in more complex ways. You use treasuries as a sort of like riskless asset to, you can lend and borrow treasuries as this sort of riskless thing that you use to finance various trades in the bond market. When there's a risk premium on treasuries, which means that people will not invest in treasuries unless you pay them extra yields. Yields are interest rates. That's what that means. And then those go up. And so when you have a risk premium in treasuries, which means people no longer see it as a riskless asset, people see it as a risky asset, and they start charging you higher interest rates to lend to treasuries. Well, then interest rates then go up on corporate loans and mortgages and all these other things, and companies find it harder to borrow, companies borrow to invest, they borrow to expand, they borrow to fund their everyday operations, and now they find that a lot harder. And then mortgage borrowers find it harder to borrow to get a house, and so now we're seeing mortgage rates go up from this new risk premium on treasuries. And so we're seeing those things at the same time as we see other things in the international market, such as the decline of the dollar. We can talk about that more. But the point is about the bond market. If it starts getting harder to borrow money in America, a lot of the things that we rely upon for our prosperity, for our daily economic, stuff disappears. And it gets a lot harder.
Thank you, listeners. Please make sure to like and subscribe. And if you have any questions, send them to mailbag@andrewyang.com, and we'll do our best to answer them. Thank you. This podcast is sponsored by ExpressVPN. How did you choose which internet service provider to use? The sad thing is, most of us didn't have much of a choice because ISPs operate a lot like monopolies in the regions that they serve. They then use this monopoly position to take advantage of customers, and yes, they even sell your data, your activities to advertisers and big tech companies, and you don't see a dime. That's why I protect my internet surfing and devices with ExpressVPN. When you use ExpressVPN, it's like a magic portal to a perfectly safe and anonymous internet. And don't take my word for it. This is the #1 VPN service according to CNET. It's used by major companies all over the world. So stop handing over your personal data to ISPs and other tech companies who then mine your activity and sell off your information. Protect yourself with a VPN I trust to keep my privacy online. Visit expressvpn.com/yang. That's expressvpn.com/yang to get 3 extra months free. Go to expressvpn.com/yang right now to learn more. So you wrote about this because something unusual happened, that there was what you called a capital flight, and that it was as people were selling dollars and treasuries and then putting them into euros, yen, gold. Like it just seemed like people all of a sudden weren't as confident in in the U.S. Treasury bills and the bond market generally. That what you said, hey, this has to be a risk-free asset because what the U.S. government's never going to default. All of a sudden, people were like, "Wait a minute, maybe the U.S. might." You kind of see a world where it wasn't secure, and that has very, very profound implications up and down. So there was like a glimmering of insecurity, and Trump then retracted some of his tariffs, but the uncertainty seems to be lingering.
That's right. So I would say that the uncertainty is bad. Not knowing what tariffs are going to be tomorrow is bad, but the remaining tariffs are extremely high. And not only that, Trump plans more tariffs. The idea that tariffs have been canceled or substantively walked back is a little bit of a hopium, as we say. What's actually true is that Trump he walked back. He placed a 90-day pause on many of his extremely high tariffs on other countries. Now, we could say, oh, well, they'll do another pause, or we'll just have this long series of pauses, or that he'll eventually just quietly cancel those things. But that's not what we saw with the tariffs on Canada and Mexico. So when Trump came in, he put 25% tariffs on Canada and Mexico. He then paused them after the stock market went down. Then a month later, he put them in place and did not pause them. And those are in effect now. Apparently, even though apparently we've fired so many people from the Treasury Department that they're unable to actually collect the tariffs at the border.
Yeah, I saw that. It's like some real malfeasance there.
Right, but that aside, what I'm saying is that you assume that these tariffs are gone because they've been placed on 90-day pause, but that didn't turn out to be true for the tariffs on Canada and Mexico, and I wouldn't bet that the Liberation Day tariffs are completely gone. In the meantime, even as Trump waits 90 days to go through with his Liberation Day tariffs on every country in the world, even as he does that, he's also placing sectoral tariffs on autos and semiconductors and blah, 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 on every single possible thing that will then be apparently in addition to the Liberation Day tariffs that we're going to get back in the summer. So this is not over. And the idea that it's just we're only dealing with uncertainty, we're not dealing with actual tariff policy at this point, is wrong.
Yeah, there's a 10% blanket tariff right now. There's a very high active tariff on a bunch of sectors from China in particular. I talked to some folks who do cross-border work with China where they say this is going to be a disaster. They think it's going to curb billions of dollars of trade each month right now. So to your point that there are real tariffs being implemented, and then there's this uncertainty around what the heck happens when this 90 days elapses. You do have reports that some countries are reaching out and saying, hey guys, I'd love to hammer out a deal. Ordinarily, trade deals take much longer than 90 days to hammer out, and you're not trying to do 100 of them at once. so it's unclear exactly what the administration is going to be able to report and get done within this time frame, and then it's unclear what they're going to do next. But some of the tariffs are already in, and you're getting early reports from people who are suffering from that impact. So it's folks near the Canadian border where all of a sudden Canadians don't like us, and so they're not visiting. So you have various small businesses that are suffering. You have farmers that ordinarily are trading with Canada or Mexico are all of a sudden having a hard time doing so. So you're starting to see some early impacts and even some early layoffs.
Indeed, that is what happens. And so I'm pretty unhappy about that, as should everybody be. Everybody should be really mad about this. And this is not the end. This is the beginning. It is not even the end of the beginning. It is, we haven't even seen the extent of all the tariff policies Trump is going to do. All the, he's wakes up every day thinking about which next thing he can smash about America. And the point about smashing America is to replace it with a Trump cult. The idea is to have the Trump cult of personality replace the nation of America.
So you have seen his numbers suffer as a result of this. I mean, yes. We're not sure how much bearing that has, but the last reporting I saw said that his approval rating has gone down by about 7% as a result of these tariffs. So I've been very public. I think this is some of the worst governance we've ever seen. I said something like, I've never seen deliberate value destruction at this scale. We're talking about the evaporation of trillions of dollars of value. And a lot of it can't be done and undone, to your point, where it's like if you have various companies and firms laying people off or having to retrench in various ways, like that, those changes can't easily be reversed. I thought that the economy was kind of touch and go before the tariff fiasco. And then my conversations with people have led me to think that the tariffs have dramatically lowered both consumer confidence, which comes out in various polls, but also the expansion appetite of the business types that I talk to. It seems like people are veering towards a risk-off approach pretty quick, and that stuff tends to feed on itself. So you say that we're at the beginning of the beginning, not even the end of the beginning. It sounds like you have something of a vision in store. It's almost like a story where the dragon wakes up or something goes on. So if you think we're in like the first or second inning, and obviously not holding you to it because no one has a crystal ball, but what are you concerned about moving forward?
Well, further capital flight will be a big problem. Further capital flight will raise interest rates because what happens is that people sell American bonds and then they don't believe these bonds are safe anymore. If that happens, if that continues to happen, what does Trump do? So the national debt gets a lot harder to pay.
Yep.
The interest that we have to pay on the national debt as we roll over our bonds at higher and higher interest rates becomes harder to pay. It's already near historic highs right now. And that was just from the Fed raising interest rates. But now, if you add a risk premium to treasuries, the amount of interest that we'll have to pay is very high. Especially because we responded to the very high interest rates, or the high interest costs. We responded to that by issuing a whole bunch of very short-term treasuries, assuming interest rates would go down as inflation subsided and the economy normalized. That's turning out to be a very bad bet, but it's a short-term bet. In other words, very quickly, we will have to refinance a lot of that debt. at very much higher interest rates. So interest costs for the federal government are going to go way up, way fast. Okay. And then what happens then? So number one, we simply cut spending and tighten our belts and do austerity and raise taxes. But Trump and his people and the Republicans are talking about massive amounts of tax cuts. And they certainly don't have the political wherewithal to cut spending, and they don't even appear to want to cut spending. They're just going to do more tax cuts, make everything worse. So how do you pay the national debt? There's two ways. Well, there's two things you can do, and they both closely parallel things that Trump has done in his business dealings. The first thing Trump would do when his businesses were underwater is look for a bailout, look for someone to invest a whole bunch of money in him, give him a bunch of money, right? And so there's only one, now that foreigners won't give us money, there's only one entity in the world that can bail out the United States, and that's the Federal Reserve.
Yeah.
So Trump will try to lean on the Federal Reserve to print money and use that to buy American debt to force the interest rates back down. What happens when you print a bunch of money? Well, sometimes, as in Japan, you had the Japanese central bank print a bunch of money and buy government debt, and not much happened. Interest rates stayed low. All the money stayed in the country. I don't think that's what's going to happen with us. I think we're going to get inflation from that. I think that when you print a bunch of money and use that to buy treasury bonds with high interest rates, you're going to get inflation. You're going to get more capital leaving the country. You're going to make the situation worse. You're going to make prices worse. You're going to make Americans' real incomes go down, and you're going to make the markets go down, continue to look bad, of course. More people get laid off, and so you'll get stagflation, but also you'll just get some of the sudden erosion of purchasing power, buying power, income, real incomes that we saw during 2021-22, except now it'll be self-inflicted. Well, I guess it was partially self-inflicted before, but now it'll be pretty much entirely self-inflicted. And so that's, if Trump decides to force the Fed to somehow try to bail out the US government, I believe inflation will be the result. And I believe that the efficacy of this policy will be relatively limited. And the other thing Trump would do in his business dealings is, if bailouts didn't work, he would declare bankruptcy. Trump has declared bankruptcy in his own businesses many times. If you declare bankruptcy as a country, what is that? That's called a sovereign debt default. And
the U.S. defaulting on the debt would be absolute madness.
Right, that's right. But I believe that I'm very sure that I'm not very sure. I'm reasonably sure that you're going to start seeing Trump talk about this or make noises in that direction fairly soon.
Well, to try and force the Fed's hand to do option one, you would think.
Probably. That's right. And then, but I think you're going to start hearing talks about a sovereign default.
This podcast is sponsored by Helix Sleep. I have been a mattress guy ever since I could barely afford an above average mattress, because I thought, if you're going to invest in anything, you should invest in the thing that you spend a third of your life on. With Helix Sleep, I took a personalized sleep quiz, found I needed a Dawn firm mattress, and it has been a game changer, not just for me, but for the entire family, which is weird because my kids didn't take the quiz, they don't like tests, and yet they seek out our Helix Sleep mattress more than anything else in the house. Don't take my word for it. GQ, Wired. Can you imagine being someone who actually tests mattresses? What a job. Go to helixsleep.com/yang for the spring savings event. Go to helixsleep.com/yang for 20% off site-wide. That's helixsleep.com/yang for 20% off site-wide. helixsleep.com/yang. With Helix, better sleep starts now. Yeah, I would feel a lot better about all of this if we had a serious conversation and they turn around and were like, look, guys, we're going to have to tighten our belts. If you're doing well, congratulations. You're going to have to pay a bit more in taxes. We're going to try and cut spending. Like the part that makes zero sense to me is, like, if you think you're heading towards a debt problem and a deficit problem, what you'd want to do is you'd go to international markets and be like, okay, guys, I get it. You're losing confidence that we can get our spending under control and that we have a revenue problem. Like the things that really aggravate me, that they are talking about lowering taxes, whereas in my opinion, we should be doing more on that front. Like, I'm for an AI tax and like cloud computing tax and a bunch of other things that might harvest some of the current value. I think that would actually, make people feel a little bit more confident. But like they're heading the opposite direction where they're talking about cutting taxes. The other thing they're doing is they're cutting enforcement in terms of IRS personnel and the rest of it. And so those two things, I'm just like, look, guys, if you're concerned about debt and the deficit, those two things make zero sense.
Yeah, that's true. That's right. If we you have spiking interest rates, making debt harder to pay. We've built up a lot of stock of debt, so that's just a lot of interest costs that we're going to have to pay on that large stock of debt. We're continuing to run high deficits. The exact wrong thing to do is to cut taxes, just continue to increase the deficit. But that's what they're going to do. They're going to do the wrong thing in this, as in so many other things. They're going to do the wrong thing.
Well, it certainly seems like we're heading that direction. So you mentioned Japan, which I've been fascinated by for a long time. I took a year of Japanese in college. I've been there a couple times. I wanted to study abroad there, did not. I ended up studying in Hong Kong instead. Those people who are into that part of the world. I've a lot of family in Taiwan. You have a lot of friends in Taiwan. So, been fascinated by Japan, and so Japan had a problem. has had like a multi-decade growth problem. And so what they did was they printed a ton of money and then have tried to use it to juice their economy. And then when it didn't work, they did it again. And they did it again. They've done it over and over for a long period of time. They've become this very strange example of something that we've never seen in global economics, in my opinion. But part of it is that their savers are content to keep their money within the Japanese system. And I suspect this is why you don't think that the same thing would happen with the U.S. That like investors, we have a lot more international money in our system, but also like Americans would be discontent to keep our money invested here if they thought there were better opportunities someplace else.
Yeah, that's a big difference between us and Japan. I think that Japanese investors never really thought about all bailing. And I think that the United States, it would be very difficult to get people to bail from the United States, but possible. And we're doing everything we can to move in that direction.
By the way, I went to Japan last year and it was awesome. And it felt like the entire country was on sale. Like I think of Japan as being kind of expensive, but it was not. It was really, and you kind of had that sense. And I was fascinated.
That's awesome if you make your income in Japan, because your income, your salary is going down too. It's now, given that because of the cheap yen and because of stagnation in Japanese living standards, Japanese stuff is on sale. You're right. It's an absolute bargain for us tourists.
Japan had its approach, mixed bag. The U.S. approach, most people think, okay, we're going to try and inflate this debt away, which is what you're suggesting with the money printing. And if we go down that path, it sounds like you're concerned about diminishing the buying power of like the average American consumer, which tariffs will also do. I mean, it'll make all of our imported goods more expensive. But it sounds like you think that stagflation may be in the cards. And for people who don't know what stagflation is, it's a lack of economic growth coupled with inflation. I think the last major episode of stagflation in the US that I think of is in the 70s. I mean, maybe we've had some limited experience with it since then.
Yeah, so exactly. So stagflation is when you get a slowing real economy, higher unemployment and things like that, at lower GDP growth at the same time as you get inflation. When a slowdown is driven by, aggregate demand, such as it was in 2008, whatever, you don't get stagflation, because when aggregate demand is low, you get low economic activity, but you also get lower inflation, as we saw in the Great Recession. And when economic activity is high, you get, when demand is high, aggregate demand is high, you get inflation, but you also get a strong economy, as we saw in 2021 and 22. Stagflation is the worst of both worlds. Stagflation is when you get a slowing real economy and you get inflation at the same time. Now, I don't know if we're going to get stagflation from these policies. It seems like a reasonably likely outcome when you ask consumers if inflation's coming. On the University of Michigan Consumer Sentiment Survey, they all say inflation, like higher inflation's coming. In fact, inflation expectations have been raised to levels that we've never seen on that survey. It's unprecedentedly high inflation expectations. However, when you look at market expectations of inflation, you see they're actually not really moving that much, meaning that traders do not expect high inflation. So there's actually two things that can happen here. And I apologize for being a complete nerdy, wonky kind of guy.
No, please proceed. That's why you're here, man.
Thanks. So the first thing that can happen from these tariffs is a classic supply shock, which means that it's like the oil shocks of the 70s. Suddenly oil got more expensive, right? So even though our economy slowed down, everything's getting more expensive to buy because oil goes into everything. It powers your trucks and your trains and your everything, right? I guess not trains, but it powers, all your vehicles. And so oil got really expensive. And so then we experienced a negative supply shock, which means that inflation goes up and output goes down. So in stagflation tends to come from these negative supply shocks. However, it's possible that people look at tariffs and investors and consumers and companies look at tariffs and they say, oh, shit, we're going to have a bad economy in the future. And so they all stop investing now and people stop buying stuff. Everybody gets really scared. And then you get this advance effect where you get aggregate demand going down in the short term. And instead of stagflation, you get simple, normal stagnation, recession from the panic in advance of the true impact of the policy. So depending on whether forward-looking expectations are very strong or not very strong, you could see tariffs act like a classic supply shock, in which case you get stagflation, or you could see this advanced panic, which will lower inflation, at least temporarily, but also hurt the economy. So while I think the real economy is pretty clearly going to be hurt, I think that prices could really go either way.
This podcast is sponsored by Factor. We all want to eat healthier, save time, and save money, and you're not going to believe it, but Factor can help you do all three. 2-minute meals delivered to your door, ready to eat. Even someone like me who is all thumbs in the kitchen can just make it happen because it's pretty much just right there for you. I've been loving Factor's meals lately, especially the ginger teriyaki salmon. It was so good, and I didn't have to think twice about whether I was eating something nutritious. With 45 meal options every week, I can switch it up. I'm still on track with my goals, whether I'm going for protein or keto, not really me, or calorie smart meals. I tend to go with chef selection myself. Does this sound like something you want to give a try? Just give it a try and then you can always discontinue it, but you're going to love it. Get started at factormeals.com/yang50off and use code yang50off to get 50% off plus free shipping on your first box. That's code yang50off at factormeals.com/yang50off for 50% off plus free shipping. So you and I share, I think, both concern about the mismanagement of the economy by this administration, some degree of pessimism about what's coming. Recently, Ezra Klein and Derek Thompson wrote this book, Abundance, that got a lot of attention. So one of the things I'm going to ask you, it's like, hey, let's say I were to put you in charge of everything. that you were to just
dangerous move, sir, but okay.
Better than what you know what I mean? Now. Just like all of a sudden, it's President Yang. Some listeners to this, will enjoy this visualization. And then you are the chief economic advisor. And I say, Noah, what the hell are we going to do, man? This administration's left us a bill of goods. We've got all this mess. Like what do we do? So I'm just going to tee off. I mean, I suggested some of the things I'd be into. It's like, okay, we've got a revenue problem. So number one, we're going to modernize the IRS, which does not mean firing everyone. It means actually make it so that people, because I'm of the opinion that there are a lot of folks on the margins that if they just thought like gray area stuff might be enforced, you could probably increase your revenues, like non-trivially. You maybe even have to audit a person or two, but that's cool. So you have a competent IRS, and then I would want there to be some kind of AI tax so that the massive value that's being generated might actually produce revenue, because right now I'm not sure where that revenue is going to come from.
That's an excise tax on a specific industry. That's like taxing tobacco.
Yeah. Or, there are different ways to do it.
Why don't you just
So
raise income taxes?
I would raise income taxes, particularly for
Why
very high
why would you
earners.
tax a specific industry instead of just raising income taxes across the board?
Because I think that there is going to be a lot of value generated by AI that's not going to show up in income taxes or in capital gains.
Explain why it won't show up and no one's going to make money off that value.
So let's say Nvidia's getting a ton of orders, and then their stock goes up and up and up, and then some folks in Nvidia get paid some, so you'll see taxes there. But most of that value is going to be in the value of the company and the stock, and some of the biggest tech companies might have operations in Ireland or wherever. So even if the tech company sees a massive value spike, like it's not going to result in tax revenue, because they might say, hey, Ireland, like that's where all the research was done.
Oh, right. You're talking about corporate tax shifting. Now,
Yeah.
I will say that Trump's reforms in 2017 made that move harder to pull off, because we switched from a worldwide system to sort of what we call a hybrid territorial tax system, which is an unheralded change, but it does give companies incentives to ship actual jobs and actual research overseas, which is kind of a little off brand for the Trump administration. But what it didn't do, it made it harder to do the thing you're describing, which is to pretend that research was done in Ireland and shift profits there. Yeah, so that can, corporate income tax, it's a way to evade corporate. We also cut corporate income tax. But
yeah, I just don't think that's that big a number is one of the problems.
I don't necessarily see a reason why AI is special in this sense. You could just, make corporations pay more tax in general.
Maybe
because
fine.
if you make an AI tax, everyone's going to say, well, my thing isn't actually AI, it's this other thing. That's the problem with some of these excise taxes. It's pretty easy to it's pretty hard to say oh, this isn't tobacco that I'm selling, it's tobacco. But you can't do that, right? Or you can't say it's not alcohol, it's spirits. No, you can't. But you can't do that. But with AI, it's just very, AI is a buzzword. It's a marketing buzzword.
Well, I mean, one of the proxies for AI is cloud computing or compute. I'd be open to that. It's like a backdoor AI tax.
Compute tax.
Yeah. But to your point, so economic advisor Smith is like, hey, I'm not so sure about the excise tax on AI or compute. So what would the big moves, aside from having a time machine and not doing all this tariff nonsense, but like what do you think we should be doing, because I do feel like the US is has been kicking the can down the road for quite some time. And I think that, you've got a revenue problem and a cost problem. So you'd probably try and tackle both of them.
You mean government spending? When you say kicking the can, I just want to make sure we're talking about government debt. We're talking about the federal debt.
I'm talking about the federal debt. Yes.
Got it. Okay. Yes. So we have been kicking the can on that. There's other things that people say we've been kicking the can on that we haven't, but yes, we've been definitely kicking the can on government debt. We have an unsustainably high deficit and a large stock of debt, which makes us vulnerable to increases in interest rates, because those increases in interest rates then cause the large stock of debt to be rolled over at higher interest rates, and we start paying high interest cost. So what do we do about that? You're absolutely right. We need to raise tax revenue and we need to cut spending. That's what we need to do. How do we raise tax revenue? We raise income taxes. That's what we do. The reason income tax works, it's at the, property tax is the best tax, but it's done at the local and state level. The federal government does not, and in fact cannot do it. However, the federal government can do income tax, and income tax is the most effective way at raising revenue without harming economic activity very much. Income taxes don't do a heck of a lot to harm. So personal income taxes are even better than corporate income taxes in this way. Although it turned out that corporate income taxes aren't maybe quite as damaging as we used to think. So you can raise corporate income tax, you can raise personal income tax. Remember that when you have corporate income, like we're talking about with AI companies, Nvidia or whatever, that's actually going to get double taxed. So that income gets taxed when it goes to the corporation as profit, and then when it gets distributed, to people as capital gains or earnings or whatever, it gets taxed a second time. So we can raise both those taxes. We can raise capital gains and dividend taxes, where we get the money when it gets distributed to equity holders. And we can also raise taxes on the actual earnings itself. So we can double tax. That's what we do to corporations in exchange for the fact that they have limited liability in terms of bankruptcy. So that's how our corporate system works. We can raise those taxes. We can raise individual personal income taxes. So we raise taxes on like high earners. So one thing that we've seen is that a lot of the supposed divergence between, a lot of what people have misinterpreted as corporations running away with the money of the middle class was actually just divergence of salaries. You saw higher paid workers getting paid a lot more, whereas you saw normal workers not getting paid a lot more. So you saw a big divergence of labor income, highly compensated labor. And I think that you've talked a lot about this in the past. And so but if you raise personal income taxes, you can compress that. So I would say personal income taxes are like the target number one to raise. And we used to talk about this all the time in the 80s, 90s. That's what we fought over, was personal income taxes.
Yep.
And that was smart. And then we got away from that and started talking about other things that are less relevant. But we need to get back to that. But anyway, I would also cut spending. I would especially cut spending on healthcare, education, other service industries. Liberals won't like that. But the reason you got to do that is because some of the money we spend on those services goes to actually providing the services, while some of it increases prices. Those are services that are in very inelastic supply, which is to say that when you throw a bunch of money at people and say, hey, go use this money to buy healthcare, and then they do that, then what happens is that partly people get more healthcare, but partly prices just go up.
Advisor Smith gave something to everyone. Like it was right down the middle. It was right down the middle. That was a very, very, very on brand, Noah. I'm excited to hear what you think of Derek and Ezra's abundance approach. I mean, a lot of it is trying to cut red tape, which I think most of us would agree with. It's been fascinating to see the response to them. I mean, certainly I'm someone who's been arguing for abundance, but I dare say that there's a little bit of a scarcity wave coming our way, unfortunately. Man-made, like engineered by some terrible, terrible leadership. And I can sense the frustration and pain in your voice. I've been mad about this ever since, because as someone who wants to make good things for people, just seeing someone destroy value at this level is really, really painful. I feel like we're killing our golden goose. Like this, it's like the golden goose. We have the world's reserve currency. People, use T-bills and dollars as a means of exchange. And now people are talking about a moron premium, which is like, you got to pay me more to invest in your country because you're led by someone we don't trust.
Yes. True. All of it true. You're correct.
So you are someone I do turn to for both facts and reason. If someone wants to keep up with you, subscribe to and you write a lot. Like I was going to say daily, I'm not sure if it's daily, but if they want to subscribe to your insights, how can they best do so?
Well, they can go to my Substack, which is called No Opinion, NOAHPINION. There's no O in the middle. It's a pun. No Opinion. Get it? Anyway, you can go to No Opinion and you can subscribe to my Substack there. And you can, 2 out of 3 posts are free. You can read most of it for free, actually. And then, if you want to read the other 1/3, there's a paying tier that you can get.
Very reasonable. Also on social media, if you look for Noah Smith, or he shows up as No Opinion. Thank you, Noah, for putting the good word out there, and really glad to see you just plant the flag and make your way based upon being good at what you do. Like it's actually very uplifting.
Thanks. I really appreciate that. That means a lot.